What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Dakota. Today is Monday, October 21st, 2024. And this is how we traded SPY today, folks. But before we get into that, if you like our videos, you know the thing. Go ahead and smash that like button. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is multiple times a week and sometimes on the weekend. Also, leave us a comment. We greatly appreciate those comments, and don't forget to share. Share it with your friends. Share it with your neighbors. Share it with your family. Share it with your trading community, folks. Get the word out there. 920 Trading. Anyway, let's get into the chart. We're looking at pre-market high, 584.59. We've got pre-market low sitting at 582.38. Before the market even opened, folks, here's what I'm looking at. I'm looking at, okay, we got $2.21 worth of movement in pre-market. Again, it's kind of disjointed in here, but nevertheless, we hit that pre-market and it ran out. Had some bad price action. Got into the close in here, but yeah, plenty of room. Now, down below, what do I have? Down below, I've got 580.20 and the ever elusive 579.14. That's the zone. That's a massive, massive, massive demand zone. Are we ever going to get there? Yeah, I would think eventually we'll get there. I have no earthly idea when we're going to get there. Pre-market high, again, 584.59. I've got a 15-minute supply zone up top at 585.18. And then I've got this major supply zone at 585.92. Now this line right here, I moved this around a couple of different times. This represents absolutely nothing but a level on volume profile. So this represented a thin volume we were trying to breach to the downside and a thin volume we were trying to breach to the upside. So other than the named levels, I moved this one around a couple of times today. So let's get into the chart, folks. So right out of the gun, you know, I got folks that are going, okay, let's take this thing back to the upside. But I sat on my hands right in here. We didn't have a fresh cross. We had a fresh cross right in here at about, a couple hours before market open, 7:45, an hour and 45 minutes or so before the market opened. I'm not taking that. Now, look at what happened into the, or a little bit, what do we have? About 30 minutes after open, we got a fresh cross to the upside. I didn't like it. So here is the why behind me not liking it. Number one, we're too close to that pre-market high, and you know how it likes to reject off of that pre-market high. So I didn't take it. I said, you know what? I'm going to play the favorite play of them all, folks. I'm going to play the rejection. So again, we had this level right up here that we're looking at, 584.79. Above this was super, super, super thin volume. It was down here, I think, at about 583.83, 84, somewhere right around in here. It was here. I moved it up again because we had thin volume above this level. I'm going to go ahead and show you the thin volume above that level. Let's see if I can get there. Here it is. Here it is, folks. Pre-market high. It's right here. So you see this thin volume. Look at that, 584.79. And again, you can look at this and you know what it did. This is the 5-minute chart right here, folks. But yeah, that level right there, it was just thin volume based on this. When you can get a breach, a thin volume breach to the upside or a thin volume breach to the downside, folks, go to town, put on the trade. Now, if you're a 920 trader, wait for the cross. But again, there are multiple ways you can play it. You can play it aggressively. That's going to be a fishtail play. You can play a double cross, or you can take a conservative play. Wait for the specific play. Now, if you can anticipate the moves, and once you get into that thin volume area, that is where you're going to do very, very, very well. But look at this. I mean, yeah, you can see it right here, folks. You can see it. Double cross to the downside. We failed to get into this thin volume area, so consequently, we couldn't get up to this 15-minute supply zone. Failed to get a nice close over this area. Double cross to the downside. I think I've had some really, really good executions on entries lately, and I think this one was really, really good. I think I had 9, 10, 12 cents worth of risk on this particular play. On the close of this candle right here, I said, you know what, guys? I said there's not much risk. That's a double cross to the downside. This is our play. Again, pre-market high. So what we typically like to do is take it from pre-market high to pre-market low. Or if we start out at pre-market low, then we take it to pre-market high. Again, it works all the time. Does it work every time? Absolutely not. But it works a whole bunch. I mean, it's just a really, really strong play. Sometimes it's a fishtail play. Sometimes it's a double cross. Sometimes it's a confirmation candle. But again, played it right in here. And you're looking at this chart going, we're in an uptrend. Why are you taking puts in an uptrend? Well, pre-market high. This is the why, folks. Again, let me show you this level up here. So this is it right here. We failed to get into that thin volume area. And the result of that is it came right back down. Now, this volume profile did not look like this early. We had to put down a whole lot of volume to make it look like this. It did not look like that early. But anyway, double cross to the downside. Again, very, very low risk. 12 cents worth of risk. Played it down, played it down, played it down. There were a couple of times, on this candle right here, I said to myself, well, let's take the trade off the table because you got a really nice push to the downside. And then I thought, you know what, trust the 9, trust the 9, trust the 9. And then I took it off on this candle right here. So at 10:40. So how long were we in that trade? 20 minutes or so, 19, 20 minutes. But I broke my rules. And I kind of realized it. I did take another trade after that, this breach of the pre-market low back to the downside. I broke my rules 2 different times. The big rule break right in here, folks, was number one, I was well in profit. It was a really, 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 really nice play. But I didn't follow my own plan. I didn't have a candle. Yeah, this candle right in here. We barely breached the 9. One of 2 different things. Neither one of these things happened. I didn't breach the 9, and I didn't wait for my pre-market low close. What I should have done on this play is I should have said, okay, I trust the process, folks. I trust it works out so often. Reject off that pre-market high. Look at the 5-minute. I mean, here's your 5-minute. Look at this. It's just pushing down. Even see it on the 3-minute. Look at that 3-minute. There's no reason. There's zero reason. There's zero reason for me to take this trade off the table at this level. None. Zero. Zippo. I'm not a scalper, folks. I don't just look for that 10 or 20 or 30 cent move. That's not who I am as a trader. I had a trading plan going in. I said, okay, let's take it from pre-market high. Let's see if we can get down to that pre-market low, or we get a nice little curl and it starts heading the other direction, at which point that play is over. It didn't happen, folks. It didn't happen. So again, now I know what you're going to say. Well, you made good money. And I did. But the point is, I did not follow my trading plan. And the result of this is I was doing my journaling. And my trade diary. So the journal, that's the metrics of the play, folks. The journaling is the metrics of the trade. And then the diary. So I did a diary before the market opened, and then I did a diary after these, and I called myself a couple of choice names. It wasn't anything really bad. I don't believe in that, but I came down on myself like I needed to, just to remind myself that there was no reason to take this trade off the table other than, I hate to use the word fear. I was never fearful in this trade. I just took it off prematurely. Folks, that's one thing. We can't do that. As traders, when you get a $2 move, and in this case, it turned out to be about a $3.50 move, something like that, I think. Almost a $4 move down here, guys. $3.50, $4 move. When you get one of those, there has to be a reason for getting out of the trade other than, oh, it's a nice big tail on the bottom of the stick, or oh, it's a nice big wick. I'm at that, folks, there was no reason why this wasn't going to go to pre-market. At worst case scenario, it curls, we get a close, I close the trade out at that point, still in profit. But again, no reason whatsoever to take the premature profits. None. Zero. Zippo. And again, I stopped trading at that point. At that point, it was like, you know what? I have to, because I'm such a big advocate that if you break your rules or don't follow your trading plan during the trading day, be done. And again, I took this trade over in here, and then it finally hit me. It was like, I shouldn't have closed it here. But again, I took it here, really it was a nice trade again, back to the downside, but I didn't give it any any room to move back a little bit lower. So kind of broke my rules a couple of times during the trading day. Again, very, very nice and green, but that is beside the point because we cannot focus on the result of the trade, but rather the execution. The execution, folks, is the only thing that matters. I can't stress that enough. The execution is the only thing that matters. Number one, if you have a good, strong plan, and you have done the testing, and you've done everything to know that your edge over time will net good results, then don't worry about the results of single trades, folks. Individual trades. Now, I say this. Treat each individual trade like it is the most important trade that you will ever put on in your life. That's how critically each individual trade is. But at the same time, the results of the individual trade or trades, they are insignificant in the overall picture. All right, so every trade matters, but they're insignificant. Try to square that circle. Okay, back to the downside. Again, look at this thing. It just ran and it ran and it ran. Now, upside move. What's this upside move looking like? And at this point, I stepped away and I said, okay, watch for breaches of structure. We're watching for structure. You can call it, you're breaching, resistance, whatever. I call it a structure break. When we start breaching structures, folks, that's when you want to put on the trade. So you got a double cross here. Yeah, you might take that. You might not. You're still within structure coming back to the downside. Once you get above that 20, and breaking structures, again, we're looking left. So you can draw a horizontal line right here. Okay, structure break, a little pullback. Every time you breach one of these structures, folks, that's a vote that it's going in a specific direction. But look at this. I mean, it was just a push to the upside. It got a little bit ugly in here. Not so much ugly, it just kind of pull back, and then a nice push to the upside right in here. This was, and we had one of our members was in a trade in here, and he said, what do I do in here? And I said, well, you've got support at 93, so 581. I think I said 581.94. I said, you have to take yourself out of the trade if we get a close below that level, so 581.93. If we do, then that trade has to be over for you. And again, I think we had a little bit of thin volume down here. Perhaps, I don't remember. I could show it. But then we got it kind of bounced around. And again, watch this level right here, 582.38. And folks, here's the thing. We do this in real time. And we're talking about these trades in real time. Everything is not after the fact. We can look at it after the fact and go, oh, it's been a good trade. But it's our ability to do it in real time that makes the difference. That's the difference between a successful trader and somebody who is not successful doing this. Okay. Anyway, back to the upside. Pushing through. Again, that pre-market low right in here. Now, the rest of the day, look at what she did. This was just bad in here. This is really bad. It wasn't doing anything except just kind of bouncing around just a little bit. These candles are really, really small. We're starting to get into the later parts of the day. If you don't have decent movement, folks, you're going to get chopped up. Let me show the higher time frame again in this area in here, folks. So look at this. This is where we were. All of this chop, this is a heavy volume area. And again, this is all the volume that was laid down Friday and today. When you get into a heavy volume area late in the day, you're looking to give your money away, folks. You're looking to give your money away. And unless we're plowing new ground, leave it alone. Come back later in the day. Here's your 30-minute look. That's what she looks like on the 30 minutes. Let me see if I can get a volume profile to pull up. There we go. Again, there's 15, there's 30. So again, you see all this. This is relatively light up here, but still it's got some volume, no question about that. But again, here's your big blob of volume. And once we got into, push up, and it just didn't do a whole lot. But again, on the daily, it looks like this. So you can see it just not a whole lot of conviction to move it one way or another. Mid to late day, folks. So mid to late day. Now, you're talking about in the late or the last hour of the trading day, double cross to the upside, pushed up. Another trade, super late in the day. Yeah, can you play these things? Absolutely, positively. 350, what did 350 look like today? Didn't look like much, folks. We did not get that close. We were looking to get a close above VWAP, and it just pulled back to the 20 and pushed back up. But again, overall, there was some really, really, really nice setups. And again, you're going to look at this at the end of the day and go, oh, that was here. I wouldn't have traded this in here. Well, you don't know when you get into one of these trades what's going to happen. You don't know if it's going to bounce around. You don't know if it's going to go up. You don't know if it's going to go down. Again, kind of bounced around, push up a little bit, push up, found support again on pre-market low. That seemed to be a really, really good level of support. And consequently, or incidentally, that was also the 5 DMA. The 5 is the daily moving average. I just look at the 5 SMA and then change the chart over to the daily, and that gives me that same level. So we had that same level right in here. The POC was right around here at some point, as I think it was a little bit higher. But anyway, these levels, the levels matter, folks. But anyway, overall, there was some really, really, really nice plays today, but there was a lack of a lack of catalysts, not really a whole lot going on from a catalyst standpoint. Let's see, I don't think we have a whole lot going on tomorrow either. Let's check that out here real quick. So tomorrow being the 22nd, we've got Harker, FOMC member Harker, and then at 10 o'clock. And we also have the Richmond Manufacturing Index. Other than that, folks, we don't have a whole lot going on. So that's about it. But anyway, folks, that is how she played out today. So I'm going to say it again. I said it earlier. If you like our videos, please go ahead and just smash that like button. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is just about every day. And sometimes on the weekends, I'm going to do a volume profile talk one night this week, folks, and it will be recorded. So be ready for that one. Also, don't forget to leave us a comment. We appreciate that. And I personally respond to every single one of the comments. And share with your friends, neighbors, family, and your trading community. Now, if you are interested in live daily trading, where we talk about each and every one of these trades, folks, each and every one of these trades, head on over to our live trading Discord. It's called Trading Decoded. We are so convinced that we can make you a better trader. We're going to give you that first week for free. That's how much we believe in the process, folks. It's all about the process. But we believe in it so much that we will make you a better trader. We'll give you that first week for free. If it works out, wonderful. If it doesn't, please send me a message and let me know why it didn't work out for you or how I could do better. But at any rate, folks, oh, and guess what? We're not a call-out service, but you know what I do? I'm calling out my trades, folks. I'm calling out my trades. Good, bad, or otherwise, folks. I'm calling them out. And then when we get into the trade, guess what? I'm talking about everything that I'm looking at. I'm talking to the group, and I'm also talking myself through the trade, folks. I'm a human being just like everybody else. But again, whether it's a winning trade or a losing trades, I'm talking myself through each and every one of those trades. So again, the link for that is down below. It's called Trading Decoded, best damn Discord in the world, folks. Now, if you're interested in the 920 crossover strategy, head on over to 920trading.com. 920trading.com. The entire strategy is there for the world to see, folks. You do not need to spend thousands of dollars on some super secret strategy that is neither super nor secret. Folks, I'm telling you right now, the entire strategy is there. If you're willing to put in the work, folks, if you're willing to put in the work, you make it happen. Go to 920trading.com. While you are there, sign up for our free weekly newsletter that comes out every Saturday at 11 o'clock Eastern time. Every single Saturday, folks. You want old newsletters? Fine. Send me a message and I'll send you old newsletters if you want them. But anyway, folks, thank you for spending a little bit of your precious time with us today. We greatly appreciate it. We know that there's other things to do, but the fact that you are here watching our videos every single day, that means a lot to me. So again, thank you very much. And again, thank you for spending a little bit of your precious time with us today. But you guys know, if you, I hope everybody had a great day today. But more than anything else, folks, and again, you know that I broke my trading plan today, broke my rules. The most important thing, the thing that we want from you the most is we hope that you followed your trading plan today. Whether you're red, green, or otherwise, we hope you followed your trading plan today. So we're going to do it again tomorrow, folks. Tomorrow is Tuesday. Today is Monday. What we're looking for, I'll know it tomorrow morning, folks. I'll know it tomorrow morning. But anyway, hope everybody has a great rest of the day. And you know it. Until then, we will see you in the markets.